What is going on, traders? This is going to be the final video of this week because, plain and simple, I'm tired. Okay, I'm very tired. I need to catch up on sleep, and so I will not be making a video tomorrow. I may make video one day this weekend, maybe on Sunday or something like that, but ultimately I'm going to take the rest of the week off and pretty much enjoy my time off, right? So, and obviously I'm still going to be in a Discord, of course, but if we're looking at the overall market, things are looking good for the upside, right? I'm not going to change the thumbnail or anything like that. I'm going to remain bearish, right? But ultimately, still enjoy the upside while it's here. There is possibility that we see more upside. I'm not going to take that away. But one thing we need to worry about is heading into next week. What's coming next week? We have GDP next week, April 30th. And this is my warning. All right, if we're looking at the NQ, we're on a daily time frame here. As you guys can see, we have this massive rising wedge pattern. We have a death cross here as well. And one thing I discussed a while back in a few videos back, right, is the 50 MA, the 50 SMA. Anytime we've made a new low, or majority of the time, if we go back in the past, every time we made a new low, right, the first low historically is not the last low. For example, right here, you made a new low, but then you ended up somewhat retesting the 50 SMA before making a second low, right? And you can keep going back in the past and seeing this happening over and over. Now, I usually base this off the weekly time frame, right? But hopefully you guys get the idea that the first low historically is not the last low. Here, for example, you made a new low, you retested the 50 SMA, and then you made a new low towards the 200 MA. And what's important to note here is that you have yet to retest the 200 MA on the NQ. And this is the weekly time frame. All right, every time you made a new low on the NQ, majority of the time, if not all the time, you have hit the 200 MA on the weekly time frame. Okay, on the weekly time frame. So here, for example, you made a new low, but not only did you make a new low, you headed straight for the 200 MA. Here, you made a new low, you retested the 50 SMA, and then you got pretty close to the 200 MA. We won't count this, all right? This was one scenario that it didn't happen. But, however, the first low was not the last low here, all right? And you can continue to go back in time and see this happening over and over. The overall point here is that the 50 SMA is key. All right, the 50 SMA is key. This blue trend line right here that's, wiggling back and forth. That is the thing you need to pay attention to, especially heading into next week. I think we have at least one more week before we see some real action on the market. And the reason why I'm not considering this real action is because we've been mostly consolidating within this range. And it looks like we could potentially break out, but ultimately we've just been back and forth within this range for the past week or so when we're looking at the NQ daily time frame. Now, if we do continue to pump towards the upside, your key level here is 19,800, between 19,800 and 20,000. Right here is your supply and demand zone. And if you zoom in, you see that the 50 SMA for the daily time frame is right around this range between 19,800 and 20K. If we go to the weekly time frame, it's slightly above 19,800. Well, it's slightly above 20,000, I should say, but very much possible that we can head as high as 20,000, 20,200. Now, if we look to our left here, we see that there is a double bottom on the left. And again, this is the weekly time frame, right? You have a bottom here, and you also have a bottom here. And then your neckline is all the way at around 20K. All right, so if we continue to pump, it's a big if, right? We can easily dump maybe tomorrow. I don't know. We do have news tomorrow. If we continue to pump towards the upside in the overall market, that is what I'm looking at, somewhere around 19,800 and 20K before we reject back towards the downside and start heading towards the 200 weekly MA. I stand by what I said. I stand by what I say. I've said it multiple times before. I don't think the bottom is in. I think this is just simply a pump before the next real dump, and we are going to make a new low. And then after that new low, we'll most likely see the bottom, and then heading into summertime, we'll see the market rally. I don't know about all-time highs just yet, but we will see the market rally. That's my thoughts. You guys let me know what you think in the comments below. Right now, like I said in the last video, we haven't broken structure, we haven't made new highs or anything like that, so this easily can turn into a lower high, right? You have a high here, a lower high here, and a lower high here. So even if we break out of this range right here with this consolidation right here, you can easily just simply make either a double top, or you make a lower high here before breaking back down. Now, granted, for the bulls, the good sign here is that you made a higher low, but ultimately you have yet to make a higher high. Until you make a higher high, or at least until you break within this rising wedge pattern right around in here, probably around 20,800, 20,700, I still remain bearish for the intermediate to somewhat long term. We'll just say somewhere into May, right? So if the market pumps into GDP, which is next Wednesday, I will be careful. All right. That's my overall point here. GDP is Wednesday. It's been all types of signs showing us that GDP is not going to be good. The Fed doesn't even expect GDP to be good. Banks do not expect GDP to be good. All I'm saying is that if we pump into GDP, be very careful. I'm not saying get calls. I'm not saying get puts. I'm just saying be careful. All right. And that's if and only if we continue to pump into GDP. ES. ES, your key level here is 55.10. You are slightly above that. After hours, you're like 55.11. Well, you are at 55.11. If you manage to hold above 55.11, and again, we're on the daily time frame here. If you manage to hold above 55.11, let's actually go to the 2-hour time frame to see exactly where we are. If you manage to hold above 55.11, then you open up the floodgates all the way to 5,700, 5,650, 5,700. Highest you could potentially go is about 5,800 on the ES. Now, if we go back to the daily time frame here, the 50 SMA is right around this area between 5,700 and 5,800. So if we continue to pump towards the upside, and again, that is a big if we continue to pump, that is what I'm looking at. As long as you remain above 5,500, between 5,500 and 5,510. That's what I'm looking at for the ES, but ultimately I think we're going to see more downside. If we go back to the weekly time frame here, you see that we are looking at a move. If we are going to head much lower, we are looking at a move towards 4,750. All right, 4,750. So overall, my point here is to pay attention to pay attention to the 50 SMA. All right, pay attention to the 50 SMA. Pay attention to how we react to the 50 SMA. If you have the 100 SMA up on your charts, I want you to pay attention to that as well. 2, pay attention to if, again, the key word here is if we continue to pump heading into GDP next Wednesday. All right, if we continue to pump heading into GDP next Wednesday, and we just so happen to be at the 50 SMA, be careful. All right, that's all I'm going to say. Be careful. Do what you want with that. Whether you want to buy calls, whether you want to buy puts, it's really up to you. I'm not here to tell anybody what to do with their positioning. I'm just simply saying be very much careful. Right? So ES, your key level, 5,500. We went over that, 5,510. As far as downside goes, 5,500, obviously. And then from 5,500, if you manage to get below 5,480, then you're looking at a move towards 5,450. Lowest you could potentially go is about 5,380 on the ES. Once again, if we go back in time on a weekly time frame, every time you made an original low, or a majority of the time we made an original low, you ended up making a second low until you hit the 200 MA. Anytime you did not hit the 200 MA or not make a second low heading into the 200 MA, you pretty much went straight there. All right, like no breaks, no stops, no hesitation. You just went straight there. You went a little bit below it here, and then you broke back towards the upside. Here, same thing. You hit the 200 MA. Here, you hit the 200 MA. All right, so you go back in the past, you see that majority of the times whenever you made a new low, okay, the key words here is new low, all right, you ended up hitting the 200 MA. Whether it was the first time or whether it was the second time, eventually you ended up hitting the 200 weekly MA. I still think this is going to happen, and I still think the bottom is not going to be in until closer to summertime, sometime around maybe end of May, June. I don't know. Okay. Now, a lot of you are asking me, how do I know this? It's experience, guys. I've been trading for 12 years. It's something you just can't explain, honestly. I can't explain it. All right. It's just something I've learned from experience, something I gained off experience. Call it a feeling, call it what you want. Don't take my word for it. Always do your own due diligence. Always do your own research. All right. I'm just a trader that's talking on YouTube at the end of the day. For all you know, I'm probably a chihuahua with oven mitts on talking. Okay. So, never take my word for it. Never take any YouTuber's word for it. Always do your own due diligence, because at the end of the day, I can be wrong, and I have no issues with being wrong. Majority of the time, it's the viewers that have an issue with the YouTuber being wrong, because a lot of you viewers think we're gods or something. I don't know. But regardless, when we look at the SPY here, all right, because I almost forgot to go over the SPY. All right, when we look at the SPY, you're pretty much looking at the same thing here. Your key level here for the SPY is obviously 550. If you manage to get above 550 on the SPY, let's go to the daily time frame here. If you manage to get above 550 on the SPY, then the floodgates are open to 560. Okay, 560. There is a gap at 555 that will be a very strong resistance level. So between 555 and 560 is what I'm looking at for the SPY if we manage to hold above 550. Now, what's important to note here is that you have a gap back towards the downside all the way to 527. If you are considering all-time highs, I do not see a world where we hit all-time highs before filling this gap. I'm sorry, I just don't. Even if we don't make a lower low, I don't see us continuing to pump towards the upside before filling this gap. Not continuing to pump, but I mean all-time highs before filling this gap. All right. I said this in the Discord. Somebody asked me about, do I think we're going to see more upside in regards to the futures and things like that? Right. It's very rare the futures market leaves gaps open longer than a week. Like, it's very rare. You can go back in time and check this for yourself, but it is extremely rare that a gap is left open. I'm not saying it doesn't happen. Like here, for example, it took a while for this gap to get filled on the NASDAQ, and then eventually it got filled, right? But it's very rare that that happens, all right? It's very rare. But majority of the time, if not all the time, gaps all the time get filled on the futures market, like all the time. Okay, this is very rare. Like, I don't think I've ever seen a gap not get filled on the futures market. Now on the ETFs, yes, SPY, triple Qs, there's plenty of times where gaps don't get filled, but it's extremely rare to see on the NASDAQ and ES that gaps don't get filled. So that should be indication to you that at some point in time we are going to head lower, right? Maybe not new lows or anything like that, but we're definitely going to at least fill this gap. All right. Let me know if I'm wrong. Maybe there is a time or multiple times where gaps aren't getting filled on the futures market, right? But if we go back to the SPY here, right? If we manage to get above 550, I've already said this, 560 is what you're looking at. 555, 560, pretty much this gap fill at 555. If you manage to get back below 545 and actually hold, right? We saw the SPY continue to try to break below 545 and just failed multiple times. Then you're looking at a move towards 542, 543 range. And then from there, you're looking at a move towards, well, if you get below 540 all over again, then you're looking at a move towards 537. And then from 537, you're looking at 535. So that's what I'm looking at on the SPY when it comes to upside and downside. Triple Qs. Triple Qs looks really good here. I'm not gonna lie. In regards to upside, 470 is your key level here. We saw all day that Triple Qs has had a hard time getting above 470. If the Triple Qs manages to get above 470, then you open up the floodgates towards 480. Now, if we go, well, we're already on the daily time frame. If you're looking at the daily time frame here, there are minor fair value gaps at 480. So I do, regardless of me thinking upside is possible here, right? I think it's very limited. I think it's extremely limited, right? It's very much possible that we don't even make it to these levels. Okay, is that really surprising to say with our president right now? Like, he's just so random, right? And from what we know, from what we can tell so far, it seems like he's constantly lying to us, right? China is saying one thing, like, bro, we never talked to you, like, bro, we never came to a deal, like they've been saying that pretty much all day, and Trump is like, yeah, I talked to China, we're so close to making a deal, and whole time China's like, what are you talking about? Right? So don't be surprised if China like double down really hard on this and it's like, yeah, we never talked to your president, he's lying to you guys, right? So just be careful. Okay, now again, with triple Qs, 470 is your key level. You managed to hold above 470, you're looking at a move towards 480. Highest you could be looking at is about 490. Okay, about 490, and 490 is around the 200 MA on a daily time frame, so it's very much possible. Now if we zoom out, we see that we are playing within a rising wedge, or playing below a rising wedge right now, so it's very much possible that we retest somewhere around this range before heading back down. All right, so want to make that clear. Now as far as downside goes, when it comes to the triple Qs, if we zoom in, we see that our key level is obviously 470. From 470, if you stay below 470, you're looking at 465, and then from there you're looking at a move towards this 460, 461 level, right? If you manage to get back below 460, there's no doubt in my mind that you're heading towards this gap fill at around 452, 450 on the triple Qs, and then from there we'll have to see what happens, right? But again, you have yet to retest the 200 MA, which is at around 380 for the triple Qs. And if you go back in time, you see the same thing I've been talking about this whole video, where you make a low, and then the first low is usually not the wrong low. I mean, not the first low, right? You end up making a second low until you hit the 200 MA. And if you do make a new low, then you don't make a second low, then you're just heading straight towards the 200 MA. All right. Now, there's like one time where this didn't happen, but ultimately, when you make a low, you end up touching or getting really close to the 200 MA. Okay, so just want to make that clear. It doesn't mean it has to happen this time, but I'm leaning more so towards it happening. I don't see a reason why it couldn't happen. It looks like we're repeating the same process that we've seen in the past, right? So that's what I'm looking at for the triple Qs. I think I talked about both directions. All right, so one stock I want to talk about real quick is Google. So when it comes to Google, and this is why I think upside is very limited, I've had very honestly, I didn't think Google would beat earnings, right? I'm very surprised by that. They did a buyback, so of course they ended up beating. But regardless, I've said this in the Discord. Google's upside is extremely limited. Like when you have this rising wedge pattern, not only that, but 170 is a very tough level. I'm not saying you can't break above it, but the 50 SMA is like right around 173. So even if you get above 170, you have a lot to deal with. You have this trend to deal with, you have this 50 SMA to deal with, and then you have 170 to deal with. And I think this is an indication on what's to come when it comes to the overall market, right? So can Google pump? And we're on a weekly time frame, so it's not reflecting here. But if we go to the 4-hour time frame here, can Google continue to pump? Yes, but again, I think upside is very limited when it comes to Google. And I don't see a world where Google is just going to take off without the market, right? So this could be an indication that we might see downside soon, right? I think we got at least one more week, probably less than that. And my guess is that, this is just a guess, GDP. Okay, I think GDP is going to be, if not our president prior to that, I think GDP is going to be the reason everything just plummets. Okay, and then obviously news with that will start helping everything else plummet, right? So that's what I'm looking at when it comes to Google right now. It's just I said this in the Discord prior to its earnings. I just don't see a world where Google just goes crazy, right? There is a gap towards 200, sure, but when you're talking about the projected move of this rising wedge, you are talking about a move all the way towards 100, right? All the way towards 100. And once again, Google has yet to hit the 200 in May. So if we don't head towards 100, maybe the measured move doesn't work out, right? That's very much possible. You're looking at a move towards 137. Okay, I think that's very much possible that we hit 137. And every time Google, at least majority of the time, Google hits the 200 MA on a weekly time frame, you bounce back towards the upside. I don't think there's, yeah, well, there is one time that it got below it, but this was all the way in like 2008. So, yeah, regardless, I will be careful I will be careful with Google. I will pay attention to Google because I do think a short opportunity for Google is on the horizon. I mean, not only that, but just the overall market. I think a short opportunity is on the horizon for majority of this market. Another stock I want to look at with you guys is Apple. It's going to be probably a decent long video. So Apple, when you go to the daily time frame here on Apple, I've said this multiple times since like 200 that Apple has the potential to head towards 210. I'm looking at about 211, 213, but this gap fill all the way at 220. Once Apple has earnings, I believe next Thursday. I could be wrong. Feel free to correct me on that. I think Apple has earnings next Thursday after hours. I don't see a world where Apple beats. I don't. Right? I could be wrong. Okay, earnings is 100% gambling. It's random. I mean, Tesla proved that. Like, I still can't get over Tesla managing to pump for his earnings. That was crazy. But regardless, I could be very much wrong. You guys know how I feel about Apple. Yes, I'm in shares on Apple. My average is 140. I told you guys about buying shares at around 183, 175. But ultimately, I don't think Apple is going to beat. I've been seeing a lot of puts, 185 put contracts come in or sell. Yeah, puts come in for, I believe, May 16th and some for even May 2nd, which is next week. I don't think Apple's going to beat. I could be wrong. All right. I may make an individual video on Apple. We may do that again. I know you guys liked the last video I did. So we may do that again. But ultimately, if Apple manages to break above 210, well, actually does this and hold like 210, 212, right? Break, retest, and hold. You're looking at a gap fill all the way to 220. There's also a world or scenario where Apple just simply rejects from here and just fills this gap towards the downside. All right. Well, there's multiple gaps towards the downside. And so I don't see a world where Apple leaves these gaps behind and just continues towards all-time highs, right? I'm hoping I'm making it clear that I don't think we're going to all-time highs just yet. Okay, I think that's insane to think because a lot of these big names have too many gaps towards the downside. And I know I said don't obsess over gaps, but you have gaps in both directions. It's pretty hard to not focus on either one because you have them in both directions here, right? So at some point, one or the other has to get filled, if not both. So it's not really obsessing over either direction. It's just at some point either we reject immediately from here and fill these gaps, and maybe we start heading towards 120, right? Or we fill this gap at not 120, 220, and we fill this gap to 220 and then head back down, right? I think Apple is going to help tank the market. That's just me. I could be wrong. It's earnings at the end of the day. Do not take my word for it. I think GDP is going to help tank the market as well. There's no expectations of GDP coming in well. Maybe it's priced in already. Who knows? But ultimately, I think those are going to be the two factors that really tank the market. And we're going to head much lower. Like much, much lower. All right? Like much lower. All right? So I want to make that clear. VIX. All right, VIX looks like the VIX. Let me just get rid of all this. It looks like the VIX is heading towards potentially either heading towards the 50 MA, 50 SMA at around 25, and then from there it's tough to say. Either it fills this gap at around what is it, 22, 23. Either it fills this gap or it teases everyone. It does one of these, bounces off the 50, and then boom. All right. Ultimately, I think the VIX is going to shoot towards 60. Take it or leave it. I think the VIX is going to see 60 as a target. 40 minimum, I think is possible. But ultimately, I think VIX is going to see 60 one more time right up here. And then that's when these bears are going to step in here. And then we start pumping towards the upside for the overall market. All right. That's what I think is going to happen. All right. Ultimately, I don't know if the VIX is going to fill this gap. It could easily just stop right here at 25 and then pump, right? Or it just fills the gap, plain and simple. Okay. So in conclusion, guys, I think that's all I really want to go over. In conclusion, guys, right? I think we have one more massive drop. I do. Take it or leave it. Be mad about it. Troll about it. I don't care. But I think we have one more drop. Enjoy the upside. I'm not saying we can't see upside. All right. I think I made it clear that upside is very much possible. But I'm not going to change my thumbnails anymore until we either make new highs or we break structure. Simple as that, right? If we make new highs, like I said in the last video, 570 on the SPY. If we manage to break above 570 on the SPY, we're talking business towards the upside. Then I'm like, all right, I'm wrong. Okay, big deal. If triple Q's manages to get above 490, then we're talking about some crazy upside. All right. I know those are two way far off from each other, but triple Q's 200 MA is at around 490, right, on a daily time frame, and then SPY's 200 MA is around 570. So if we can manage to break above these, then yes, we can start talking about upside. But ultimately, I think we're just simply going to create a lower high. And if we're looking at the ES, I'm looking at we possibly hit 5,700, 5,800 before heading back down. My target towards the downside is about, well, basically where the 200 MA is at around 4,700. NQ, pretty much the same thing, 15,800, 16,000 on the NQ as far as the downside. Once we hit the 200 MA, guys, trust me, thumbnails will completely change to bullish. If we manage to break towards the upside and break the 200 daily on the upside on the ETFs that I just showed you guys, then I would definitely change my thesis. I would definitely admit that I was wrong. I don't care to be wrong. A lot of you do. I don't care to be wrong. At the end of the day, my bills still get paid and my life is still good. So that's all I have. All right. Discord link is in the description below. Didn't do too much today. Oh, just to be completely transparent. All right. Completely transparent, guys. I am in July puts for the SPY. They're all the way in July. Yeah, July 18th. I'm going to continue to add to those puts. Right. I'm going to continue to add to those puts. So 550 is another target I'm looking at. 555. And then highest I'm looking at is about 560. That's when I will stop adding puts. And then if we manage to break above 570, I will take the L. It is what it is. All right, losses happen. But yes, Discord link is in the description below. We've only taken one loss this week so far, I think. Feel free to correct me if I'm wrong. I might be wrong there. We've only taken one loss. It's been a slow week. We've taken like one or two trades every single day, and we've won majority of them. So I think, again, we took one loss. I want to say that's Tesla. But yeah, Discord link is in the description below. If you don't trust me as a YouTuber or anything like that, don't join the Discord. All right, simple as that. If you think I'm about to save your life, don't join the Discord. If you think I'm about to save your bank account, don't join the Discord. If you think I'm about to pay your mortgage, don't join the Discord. All right. The Discord is for people who are well established or somewhat stable in their financial situation and is not looking to get saved. If you are not stable in your financial situation, I'm not judging you. I'm just simply saying you probably should not be joining Discords, and you probably shouldn't even be trading. You probably should be long-term investing, if anything. I don't think trading is for people who are not stable financially, because if you're not stable financially, you take your anger out on the world. All right, and I've been there. Trust me, I've been there, so I get it. Right, when people are not financially stable, like even the trolls in my comments, I automatically assume they're not financially stable, because why are you angry at the world? Right? Why are you trolling other people? Why are you talking crap about other people? Right? So if you join in the Discord and you're not financially stable, you understand the risk you're taking. Trading is gambling. A lot of people won't tell you that trading is gambling. It's literally in the title, trading. Okay, you're trading. So at the end of the day, if you're going to join the Discord, you have to come in with an open mind. You have to understand that losses happen. No trader, no Discord is going to win 100% of their trades. If you find that Discord, let me know. I will pay for the lifetime subscription. Okay, but ultimately, there's going to be losses along the way. Have I won majority of my trades this year? Absolutely. Discord members can vouch for that if they want. But do we take losses here and there? Absolutely. Okay. It's almost impossible not to lose a trade. Another thing is, you don't have to trade every day, guys. You just don't. Okay. You don't have to trade every day. The hardest thing to do when it comes to trading is not trading. All right. This environment is very tough. I understand that. So take your time. Okay. Take your time. There's always going to be opportunities in this market. All right. And there's going to be a big opportunity coming up soon. All right. Do what you want with that information. Until the next video, traders, which will probably not be until Sunday, maybe Monday, unless something insane happens tomorrow. I don't know. It's going to be the last video for the week. All right. Going to catch up on some much needed rest. Let me know what you guys think in the comments below. Until the next video, traders, have a good one.